In a shocking move that has the financial world buzzing, Swiss bank giant UBS has announced its purchase of Credit Suisse. The unexpected union, dubbed a shotgun wedding by some analysts, arrives on the heels of Credit Suisse's ongoing financial losses and damaged reputation from numerous self-inflicted scandals and failures in risk management. This news inevitably poses the question, can this acquisition relieve Credit Suisse and avoid further financial distress for the industry? Or is this the initial shockwave of significant disruption in the banking sector? The acquisition of Credit Suisse by UBS is an astounding development and has potential ramifications on the future of finance. Both banks are deemed G-SIB, or Global Systemically Important Banks, so regulators had a strong hand in what some say was more of a forcefully arranged marriage between the two rivals. While both UBS and the newly acquired Credit Suisse are providers of wealth management, investment banking, and asset management services, the two Swiss national banks had consistently engaged in a fierce rivalry for global and Swiss market dominance. Things haven't been so great recently. Both institutions have encountered significant obstacles in the form of a sluggish global economy, heightened regulation, and intensified competition from both conventional and fintech competitors. But these macroeconomic factors were nothing compared to the financial and reputational losses Credit Suisse sustained from an unending trail of failures in risk management. In recent years, Credit Suisse has been hit by a string of scandals and legal troubles that have damaged its reputation and finances. In March of 2020, a spying scandal involving the bank's COO caused the resignation of several high-ranking executives, including the CEO. Only a year later, the bank lost $5.5 billion due to its involvement with Archegos Capital Management and suffered further losses from the collapse of Greensill Capital. In October of 2021, Credit Suisse was fined $79 million for its involvement in a fraudulent scheme in Mozambique. The chairman resigned in January 2022 due to breaking COVID quarantine rules twice, and the following month, confidential bank data was leaked to the media, revealing that the bank held accounts of known criminals, dictators, and human rights abusers. In March 2022, the bank faced a trial in Bermuda over its involvement in a fraud case which cost the group $600 million. It's been one scandalous headline after another for Credit Suisse. In June 2022, Ulrich Körner was appointed the new CEO amid growing pressure from investors and regulators. In 2023, the bank's shares hit a new low after its main shareholder, Saudi National Bank, declined to invest further. It's certainly been a tough past few years. There had been whispers of a possible combination of UBS and Credit Suisse circulating in the industry. Though gossip about this union had been swirling for some time, UBS announced the agreement on March 19, 2023. The merger, encouraged by the Swiss government, will avoid the liquidation of a global systemically important bank and mitigate contagion risk across the global financial markets. The Swiss government stepped in with $108 billion in financing to UBS to seal the deal. For UBS, it's an opportunity to take over a key rival and deepen its standing in the global banking realm. For Credit Suisse, it's a lifeline. Ultimately, big changes are ahead for the newly combined institution, likely including significant layoffs and a challenging clash of cultures, while aiming to retain legacy clients from both organizations. There's no denying that a merger of this magnitude will inevitably encounter some pretty serious challenges to be successful. UBS needs to have a well-orchestrated strategy to overcome these complications. It will take an enormous coordination of this new union to deliver on the advantages of an enlarged market share, increased profitability, and enhanced competitive standing in the international arena. But there's another reason people in the banking and business world are keen on watching this large financial rescue help you unfold. This acquisition adds to the speculation on which other banks might be next in line for life support. This could lead to an upcoming season of consolidation as banks grapple with rising interest rates, lower yields on their investments, or a possible capitalization crunch, all leading to future merger activity in the financial sector. Most importantly, this acquisition will entrench UBS as the world's preeminent wealth manager with a whopping $5 trillion in assets under management, propelling its expansion ambitions in the Americas and Asia. UBS predicts the acquisition will result in cost savings of $8 billion annually by 2027, and Credit Suisse's ailing investment bank is on the chopping block. So, how did the market respond to the news? As expected, the announcement generated a mixed reaction among investors, with some expressing deep concerns about the merger's potential challenges. Industry analysts also have mixed reactions to the news of this acquisition, with many viewing it as highly strategic for both banks. NYU Stern School of Business professor Alexei Savov said that a merger of this magnitude could mean a brighter future for both banks. He also stated that given the current global economic environment and the historical market capitalization of Credit Suisse, an acquisition actually offers a far more viable option than a chaotic liquidation. The rippling effect of this action on the markets is cause for concern. While key market indicators responded shakily, UBS stock prices took a hit as details of the agreement were released. And European bank stocks are all on tenterhooks, with investors wondering who might be next to need a life raft. Regardless of these differing views, the integration of UBS and Credit Suisse will create disruption in the financial world and within the walls of these storied institutions. However, the question still remains: will this be the first of many more bank failures and rescues? Fortunately, that speculation is none of our business. Remember to like and subscribe.